We've been asked by a number of clients recently about Melbourne and Victoria more broadly and why we like these markets. And we did some work for clients on this late last year. So the data's a little bit old, but it shouldn't have changed too dramatically. Just having a look at the price action of these markets over the last few years, you can see that Melbourne has significantly underperformed every other market, which is, some of these markets have nearly doubled. Perth and Brisbane have nearly doubled. Sydney's been extremely strong. And Melbourne's gone sideways to down for the past 4 years. And it's really been due to a series of state level policy hits more than anything, like higher land taxes, stricter rental laws, and also the short stay levy. So really targeting, Airbnb operators as well. And the net effect has been capital flight from the investor community. They've just gone and have sought better returns in other markets. And, that's really left this market, in pretty poor shape over the past few years. But we think that, this market does deserve more attention. And if you have a look at the kind of demand profile for a second, like some of the key things that we look at is, like many others as well, migration numbers. And you can see that, Melbourne is still the second largest recipient of overseas arrivals next to Sydney. And, unsurprisingly, when it comes to net internal migration, which is the movement of existing residents, you can see that, a lot of young professionals who have been priced out of the Sydney market have jumped ship over to Queensland, where it's a little bit more affordable. But, you can see that affordability in Brisbane is actually now worse than in Melbourne, which is kind of fascinating. It's clear that demand hasn't disappeared in Melbourne. It's a sentiment issue more than anything. And, governments come and go and things, improve over time. And we're pretty confident that that's going to be the case in Melbourne. It's still a tier one city and, a highly diversified economy. There's lots of opportunity for, anyone who wants to seek a well-paying job, and has great restaurants, education, hospitals. All of that hasn't changed. It's really just sentiment more than anything. If you have a look at rents as well, rents have been incredibly strong across the board. Up almost 50% probably on average since COVID. This is one of the many trade-offs of ultra low interest rate environments that we saw in COVID, then compounded by high migration as well in recent years. And, when central banks say that inflation is under control, like, you just look at this and you just scratch your head as to how they can actually make comments like that. But, again, migration has also been a key driver to this too. So we're also mindful of that. But fundamentally, what does this do to the equation if you've got rising weekly rents and you've got stagnant or declining asset prices? You can see that yields have now completely disconnected from Sydney. And historically, these two markets have actually traded very similarly in their yield profile. It's only been the last couple of years that we've kind of seen this disconnect, and it's this 70 basis point kind of spread that we think will actually compress over the near term. And so, if we can actually observe yields compress towards this sort of 3% mark, that will basically drive capital appreciation in asset prices of 18 to 20%. And that obviously assumes that median rents remain the same. If rents come under pressure, then, perhaps there is some change to the assumptions there on capital appreciation. But you can see that rents don't tend to kind of dramatically change. They can a little bit, but not dramatically. And so this is kind of the overarching thesis for us on the Melbourne market. We think that the risk reward is definitely very attractive. And, at worst, you're locking in, incredibly high rental yields relative to Sydney, which is another tier one market.